Question 6 was another great example on this paper, how you were given information that was already prepared and then asked to sort of use it further. On past exams, it's often the case where you need to actually prepare the information that was given to you already on this exam. So you were assessed on question 6 on two topics, journals and ledgers from topic 3, as well as preparing financial reports. So what do we mean by you were given the information already? Well, you were asked to complete the capital account, but you were given already two entries. One recording all the revenues for the period, so you can see there they had sales of 76,000, and then the second one you were given was all the expenses for the period. And we can see for both of these they've been closed to the profit and loss summary. So the revenues have been closed to profit and loss summary on the credit side, and then the expenses have been closed on the debit side. So it's quite common on most exams where you would actually need to do that entry yourself, but this was a nice twist where they actually gave it to you, and they also gave you a little bit of additional info. You were told that the capital account at the beginning of June had a balance of 51,200 and at the end had a balance of 50,350. The owner contributed cash and a computer, and the owner took out cash drawings during the month, but importantly, you weren't actually told the amount. So what we were asked to do specifically was recreate this capital ledger, and it's important to remember what's going to go on either side. So capital is an owner's equity account, so it will go up on the credit side and down on the debit side. So the main thing that will make it go up or down is whether you make a net profit or a loss. So we'd expect net profits to show up on the credit side and a net loss to show up on the debit side. However, the second way capital can go up or down is with transactions with the owner. So if the owner gives it a capital contribution, that'll be a credit, and if the owner takes out drawings, that would be a debit. So what we're told, or what we're given, is a general journal, two general journal entries. It's actually a good idea to, just on a bit of scrap paper, recreate what they would have looked like in the profit and loss summary account. So the first one we were given was a credit to profit and loss summary of 76,000, and that represented all the revenues for the period. So that would have gone in as a credit to profit and loss summary like so. Then we were given the second entry, which is all our expenses being closed to profit and loss summary, and that went in as a debit. So that would have gone in like so. And what we can see now is that this business would have actually made a loss. So it only had revenues of 76,000, but if we look on the other side, its expenses were more than that. So it's made a net loss. Now, what has that got to do with the capital ledger? Well, nothing as of yet. However, what will happen is that if you remember your procedure for closing the general ledger, profit and loss summary gets closed to capital. So what we do is we need to figure out which side's bigger, which would be the debit side, put that number on the other side, and then subtract the difference away, and we'll send that to capital. So what's going to happen here is capital is actually going to be a debit entry in the capital ledger, and that makes sense because capital will go down whenever we make a net loss. So in this case, we've made a net loss of $2,300. So specifically, what would that look like? Well, that would have got sent as a debit to capital. Now, you were actually already given this balance. In the answer booklet, the balance is already in there for you. Don't expect that though. It's nice that it was there. But just remember, it was actually given to you in the question. So if it's not there, you could have actually put it in yourself. Now the additional info. We were told that the capital balance at the beginning was 51,200, which was already put in for us. At the end of the month, it's 50,300. I'm going to leave that until later. I'm going to move on to the next bit, which is the owner contributed cash and a computer. So they're capital contributions. Now, if you know your capital ledger, you know that capital contributions become credits. So they would have gone in as so. And they would have been posted on the last day of the period, and the references would have been bank for the cash and computer for the computer, obviously. The next thing we're told is the owner took cash drawings, but we're not told how much. So what we're going to need to do is, well, we're going to need to recognize that first of all, drawings would make capital go down, but we don't know the amount. So what we're going to do is make that X. We're going to reconstruct the rest of the ledger and then solve for X, which we don't know, which will be the drawings of cash for the period. So what we'll do is go back to the first bit of information we were given, which is at the 30th of June, the balance of capital was 50,350. So what we know is that when this ledger is finally balanced, we have a balance there to be brought down, and then it would have got carried down there on the first day of next period. Just excuse the date there, that should actually say the 1st of July. So what we can do now is solve for x by adding up one side of the other. So obviously we can't add up these numbers because we have an x in there. But what we can do is add up these numbers. And if we add up those numbers on the credit side, we get a total of 53,450. And then we can transpose that to the other side. And what we can do now is solve for x. So what we'll do is start with the total, 53,450, less away the balance, less away the entry for profit and loss summary, and that means we can figure out what x is. So in this case, x would be $800, and that is what drawings were for the period. Looking at the marks for that question, we had 1 mark for doing the profit and loss summary entry, 1 mark for doing drawings on its own, and then 1 mark for the 2 capital contributions, one of cash of $1,250 and one of the computer of $1,000. Interesting to note, no marks for the balancing of the ledger. That seemed to be a recurrent theme throughout this exam. And looking at the marks for the question, a high percentage of students got 0. 1 in 3 managed to get 3 out of 3, which isn't a bad effort considering drawings required you to rearrange and reconstruct. That's a pretty tough ask, so 34% of kids getting 4 marks is quite good. Looking at the examiner's comments, they have noted specifically that if just because there was no marks for balancing, if you didn't do it, you could actually still lose a mark. The total of 53,450 must be on the same line. So what do they mean by that? We're just going back to the previous slide. This number here needs to be on the same line. You can't have one on one line and one on the different line. That's not acceptable balancing procedure. Lastly, the drawings amount was consequential to the other numbers, so because it was an X, it really depended on some of your other figures, so you might have got a different answer but still got a mark for that, just because you carried forward a wrong mark for one of the other transactions. Some students also thought they were balancing a profit and loss summary account, and they put in the revenues on one side and expenses on the other. Remember, they will never appear in the capital ledger. The capital ledger will just have the transfer from profit and loss summary.